All right, everybody, welcome back to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr coming to you from the live trading room of DrStoxx.com. That's DrStoxx.com, your one stop shop for all things trading. If you're interested in joining me, a great community of traders of all different levels, beginners, professionals, and everything in between, where you get to watch me trade throughout the day. I tell you what I'm buying, what I'm selling, entry price, stop price, target price, reasons for the trade. Go over to DrStoxx.com, click on the subscribe menu, scroll down to the live trading room. We're coming to you from our live trading room in Discord today with all of this. All right, enough of that. Let's jump over to look at some charts. We're over here on TradingView. This is the daily chart. I've got on here the linear regression channel set at the 2.0 and 1.5 standard deviations. I've got the 21 period moving average. I usually have the 50 and 200 on here as well, but I don't right now. Maybe I better put those on in case we need them. There's the 50 and there's the 200. And down at the bottom, color-coded volume bars, stochastics at the 14 periodicity, and down at the very bottom is a new indicator that I just bought, and I don't really like it, so I'm not going to ask for my money back. It's not a big deal, but it is not giving very good signals, and I'm kind of glad I found that out without having to spend money on some bad signals. Anyway, let's take a look at some of the indexes. So we've got another day where we had a Friday weakness, Friday market lower, and in both this week, or sorry, last week and a couple of weeks ago, it was on tariff news. Market's not real happy with tariff news right now. Slammed the market down, and then on Monday morning we had a gap down open. Now, the futures resolved themselves over Sunday night. So by the time we got to the open this morning, and today is Monday, the 10th of February, 2025, by the time we got to the open this morning, the futures were already green. So they had already been moving up overnight. That's a pretty good sign, right? That the market's in a pretty good mood. Buying the dip is always a good sign of a bull market. Selling the rip is a good sign, typical sign of a bear market. So pretty good stuff going on today. Now, it's not, we can't get too excited because we're still under a lot of overhead resistance. We are nicely above support, bouncing cleanly off support, but we've got a lot of overhead resistance. So you can see this is the S&P 500, just under 6,100, nice round number. But this shelf right here, which is right around 6,100, that's been a really tough nut to crack. We had a gap down, big slam. That was the first instance of tariffs. Here's another Friday slam, gap down, and then here's the last Friday slam, gap down. But we're still under this shelf, 6,100. We're getting up close again. We're just 10 points shy of that today. I suspect sometime between today and tomorrow, we'll have another crack at 6,100. Typically, as I like to say this a lot, the more you knock on the door, the more likely it is to open. We've been knocking on that 6,100 door for 2 weeks now, practically every day. And it's just a matter of time before we break through that. And then we're up to 6,150 and change, 6,200. Most people that are looking at targets for the S&P by the end of the year are more like at 64, 65, 6,700 some cases. So everybody's expecting the market to be higher than it is now by the end of the year, but of course it's not going to go up in a straight line. I like what's going on in the S&P 500. I don't fully trust it as far as holding these gains into tomorrow. Why? Because on Wednesday we've got CPI, on Thursday we've got PPI and jobless claims, and on Friday we've got retail sales, and all three of those could really throw us for a loop. If we have higher than expected inflation reading, we have lower than expected, higher than expected jobless claims, but lower than expected retail sales. We could see by the time we got to Friday, the market undermining this morning's lows down here, because I think that's probably where we would go. So we're still data dependent, headline dependent. Technicals are taking kind of a third place right now. But as far as the technicals go, we've got a pretty good picture, right? We're still in an uptrend. The 21 is above the 50. The 50 is above the 200. All three of those are rising modestly at least. And okay, volume's been a bit mixed. We have some accumulation days, like this one here on the big drop down. We've got some distribution days, like Friday of last week. So it's a tight um, tug of war between the bulls and the bears, and that's why we have this tight trading range. We're not trending near term. We're going sideways near term. That's consolidation. It usually leads to a breakout in the direction of the prevailing trend. The prevailing trend is up. So we expect that to come soon, but it may not be this week. We'll have to wait and see. Here's the NASDAQ. I do like what's going on with the NASDAQ. So it is printing a sequence of lower highs and higher lows. That's consolidation. That's getting tight, tight, tight. Today is a big engulfing, bullish engulfing candle. Tip down into the pink zone. Pay attention whenever indexes and major stocks tickle the pink zone, because that's usually a very good place to buy. And it was certainly a very good place to buy this morning. But man, I was not in a buying mood at all this morning. I really had to wait to see whether the market was going to roll back over, get back down to those lows that we were at Sunday night. It hasn't happened. We just have been slow. It's been a slow, steady grind higher, wearing down on those bears that a lot of bears got out there on Friday. We didn't get short. We went to cash on Friday. We were selling into that big sell off on Friday. This one right here. Right? It was an early trap, and then it was all downhill from there. And we were raising cash, raising cash, raising cash. We ended up with a green week, but it was like just a green week. The market itself was down slightly on the week. We ended up with a small profit, but it was hard work, and it wasn't that. There was really nothing to brag about last week at all. We had a couple of really good days, right? These days right here, boom, 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 big profits, and then we gave about half of those profits back on Friday. It is what it is. We can't trade the market we want. We can only trade the market we're given. But I tell you what, today's action is very constructive. I don't think we're going to get past this wedge this week. I think next week is going to be breakout. Next week it's a holiday shortened week as well, only 4 trading days. Typically around holidays, you do see a little bit more bullish action than normal. The news cycle tends to slow down as well. But we've got so much data coming out Wednesday, Thursday, Friday. It's only Monday. I like the move up, but I think we're going to probably give some of that back tomorrow. Here's the small caps. So actually, let's not look at this one. Let's look at IWM, which is the Russell Index. And this cuts out all the overnight noise, just gives us trading hours. And here's a very clear thing that's going on. So the small cap index is under pressure because if you've got inflation and you've got the Fed not really looking to cut rates anytime real soon, rates are still high, loans are still high, mortgage insurance still high, and the market, the small cap index is responding to that. You saw the S&P and the NASDAQ pretty close to all-time highs. The small cap nowhere near that. But what I like about this is that we held today, we held the 21 period moving average. We held this yellow box right here, which is a thick volume shelf. What do I mean by that? I mean that at that little price range, 225, 226, 227, you're getting a lot of shares trading hands. Bulls buying, bears selling, bulls selling, bears buying. A lot of shares are trading hands at that level. And so whenever price gets into that level, all those guys that were trapped underwater start dumping, and the guys that are trying to buy the dip are buying, and it just doesn't. It makes for support when you're above it, and it makes for resistance when you're below it. Right? Resistance, 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 support, 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 resistance, support. We're back to support, so that's good, and it won't take a whole lot for the IWM, the small caps, to break up above the 50 and the resistance trend line, which is a very well established one, right? This is the resistance trend line, the RTL. This is the STL, not as well established, right? Short term, longer term RTL. I don't think it's going to take a whole lot for small caps to get up there, but here's what it's going to take on the data side. We need to see a soft CPI and especially CPI, soft PPI, and I think the retail sales are just going to have to come in line for the small caps to be okay. Oh, let's see. Let's take a quick look at Bitcoin. I still have my I still have my MBT from our last trade. We got stopped out. Um, I sold about half of it, but I'm hanging on because I'm trying to keep a long-term position in Bitcoin, thinking that it's going to be 200,000 by the time we get out to the end of the year, as everybody has been saying. Not that I am trading by what they're saying, but the argument for a bullish Bitcoin is quite strong, I think. And I like the tailwinds. I like the macro. I like the political environment right now for it. I just think the chart has been in this trading range for 4 or 5 months, really going mostly nowhere. And right now, we're down into the pink zone and we're printing an engulfing candle. And oh, yeah, volume's not real strong, but we are at oversold stochastics. So all things are lining up for a nice bounce in Bitcoin, but it really needs, before it gets going very far, it needs to get up above 108. Gold started to come in a little bit last week. We had a reversal bar right there, and then it just, boom, right back up again. Bitcoin, nice reversal. Copper is very, very strong. Oil is not doing too badly today, right? It just has had this long pullback. It flashed a couple of buy signals last week. One was right here, and then it reversed right back down lower the next day. And now we're getting right back up again. We've regained the 50. If we can regain the 21 period moving average, then I think this probably has a pretty good chance of getting back up into the upper 70s. Okay, let's see. Let's take a look at our greens list. Let's sort these worst to best. I've got all kinds of things in here. So the regional banks, there is a volume shelf right in that area. And as long as it stays above that, we're above the 21. 21 just freshly crossed the 50. That's always a good sign. It's not something to trade, but it is a good sign. 21 is rising. We've got this nice push off the pink zone. Stall, stall, stall at that shelf. Breakout, retest. I think the next leg is higher for regionals. We just looked at small caps. Pretty good chance of that going higher. Silver has been like nowhere near gold, right? Gold is up at all-time highs and a big, big green stick today. And here's silver just kind of lounging around. So silver is a play on not just on asset value, not just on a weaker dollar, but on falling rates, but also a play on the home building industry because a lot of those products go into homes use a silver alloy. A lot of new homes going up, a lot of pressure on silver tends to spur the price, but it really hasn't been doing that well. And there was some talk in my pro trader group about manipulating the price of silver, which of course has a great history going all the way back to Mr. Hunt, who tried to corner the silver market, successfully did way back when. I guess silver among the alloys or among the metals is easily manipulated. That's what folks were saying. And if that's the case, then typically when a price gets manipulated, it falls way out of line with fair value, and then people start recognizing that, and then you get a big spurt up. If that's true, then we should see a pretty good move in silver. I'm not playing it. I don't have any silver on at the moment. I should take it back. We have some silver calls in our options room. They're a little bit above where we bought them. We bought them down in this area here, but we're still waiting for the big move. ARKK, we did go long this one. It's a nice tight little consolidation at a very strong line of resistance. Now support. The moving averages are right where you would want them. You're still down in the salmon zone of the LRC, which means there's still a lot of upside to come from here. And I just like the way this is consolidating. So this is really a play. It's a big play on Tesla. Tesla's been falling. Finally today started to catch a little bit of a bid. I'm not sure exactly where it's at right now because I haven't checked. But if Tesla gets back on track, you'll see ARK go way up because it's the biggest holding. And it is also long a bunch of, for lack of a better term, some spec plays, some meme plays, some Reddit type plays, some software names that aren't, you know, some of the big blue chips. And if that group, and I think of that group as being pretty similar to small caps, i.e., they will do well as the Fed starts to ease liquidity. Um, and then we also will see ARK get really back on track. But technically, I really like this a lot. It's almost like a cup and handle, right? A continuation cup and handle. The cup is very clear. The handle is just this little dip right here. It got up to the neckline, dipped back down, right back up again, and then it's going sideways. So it's not really a well-formed handle, but it is a handle. Let's just call it a handle. And if that's the case, then the measure of the cup, 56 to 63, is a 7 point cup. At 7 to 63, you get 70 as your target. And I like it. I like it for 70 soon enough. CRM. Every time I get in CRM, it flashes a buy signal, and then it spits me back out again. We just got long CRM a little bit ago in the main room. It's a nice A, B, C pullback into the pink zone. It's an inside day bar. Typically, inside day bars themselves don't do the moving, but they set up a reversal. When they're at the end of a downtrend, they tend to set up a reversal to the upside. And when they're here, like this is an inside day bar at the top of an uptrend, right? Uptrend, inside day bar, boom, right back down again. They tend to set that up. There's not always follow through. It's got an edge of, I don't know, 58, 60%, something like that. But it is an edge. And we are oversold on stochastics, and we're still in a nice uptrend. We'll just have to wait and see on that one. We're not going to hold over earnings, however. QQQ, I like this setup a lot. I really do. I have a feeling it's going to come right back down again tomorrow on CPI fears. We don't get CPI tomorrow, but we get the fear of CPI tomorrow. And I suspect we'll get a little bit of back and fill. But I think by the end of the week, I think we'll be back up here right around 533 or so. Have to wait and see. But I like the fact that it is showing us a clear RTL, which is very shallow, right? It's not a sharp drop. That's a nice, modest pullback. We've got a good sequence of higher lows that have been forming. We're getting some consolidation in here. We're still in the salmon zone of the LRC, so lots of upside. Everything is trending higher. The MAs are moving higher. All of that looks good. All right, Amazon. So I put on a put income play. We do a diagonal debit spread. So we've got time in our long puts, and we've got weekly time in our short puts. We just sell the weeklies week after week with a protection down below. And I think this is a pretty good setup for that. So we've got the shallow pullback to the pink zone, breakout, kind of a retest here, kind of a retest here, not exactly, but what I think is forming now is a trading range between 240 and 230. 230 looks to me like to be pretty good support. 240 clearly is resistance. And so we can continue, we can hold the 230 puts as protection. We can start selling weekly puts against those. And even if it drops, this happened with Avgo a couple of weeks ago, it dropped way down below our protection put. We just kept selling the in the money puts above the protection strike. And, it took a couple of weeks to get that back, but we did. We made it all back, almost all back. And then we had kind of a rough Friday last week where we lost probably a third of our overall profits, but it was still a nice profitable trade. If we had bought the shares and held the shares for the same amount of time, we would have been underwater. So always good to do put premium selling as an income play. You've got a lot more probability on your side doing that one. High probability trading setup. The problem is, of course, you're capping your gains, and if the stock does go crazy to the upside, you're going to be missing out. So anyway, there's that. Let's take a look at oil. We did already. Yeah, actually, I like this USO as opposed to the futures. This is only showing trading day momentum. Gap up all the way up to the highs of the day. tagging the 21 period moving average, tagging that shelf that I mentioned, looks to me like it's pretty good bet for getting up there. We've got bullish divergence as well down here in the stochastics. There are a number of Chinese plays that are showing this setup right here. So sequence of lower highs, but also higher lows, and looking to me like a long kind of bullish base ready for breakout to the upside. China's been under pressure because of tariffs, um, none of which have been settled just yet. So we're going to have to wait to see if that works out. But this wouldn't be my first play on China. I would actually go into something like Baidu or Futu or JD, which I have on here. Let's take a quick look. Similar setup, right? Same kind of setup. And right there, it's right there at a potential breakout. So keep an eye on some of these Chinese names. I'm not in any of them. I haven't been in a China play for several weeks now. Just I don't know, just not feeling it. And also, I guess the tariff threat is an unknown, and I don't want to get stuck. I don't want to get caught. Here's a one from the ARK Invest, one of Kathy Wood's favorites, Upstart, showing a nice little cup and handle breakout. I like this. I like this right here. This little cup and handle. And here's your neckline, right? Well-established neckline, and we're just above it for the first time today. Earnings, however, are I think tomorrow. Yeah, Tuesday tomorrow. So I wouldn't get in. Not a play like this on earnings. I have to wait. This one is interesting. So it's a momentum breakout play. Very nice, clean momentum. Has something to do with quantum computing and AI, and it has had a ton of call flow both last week and this week. I guess there aren't too many Momo plays out there, aren't too many momentum plays. And so when the market finds one that it likes, it just bang, 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 bang. But it could also be that there's something going on very soon in this one. Big Bear, it's called Big Bear. And that they're positioning ahead of that potential news. Could be a buyout, could be a new product line, who knows? Let me show you the flow for this one. So if you go over to Black Box Stocks, which is the one I recommend for checking call and put flow, great charts, great alert signals, and on and on. You type in the ticker symbol you're interested in, it will show you all the major purchases of calls and puts today. There are no puts today. It's all calls, all net. And I have my filter set for only 100,000 and above. So there are a whole bunch down below 100,000. And you can see 1.4 million, 1.5 million, 1.1 million, 1.2 million, 800,000, right? 1.24 million, 1.4 million, 1.4 million. I don't know what's going on, but that is very unusual. Now, here's another trick you can do with Black Box Stocks. If you click over here, let's see if we can figure out which one of these is the most. This one right here, January of next year. It's a lot of time. 10 stocks at about 8 right now. No, almost 9. 8.8. So it's a little bit in out of the money. Click over here on this little tab, and you're going to get a comparison between the blue bar, which is open interest, and this orange bar, which is the volume traded today in this particular contract. You can see the difference, right? So not a lot of open interest in this January strike 10 position going out all the way to January. That's a long time from now. Massive amount of interest in it today. So what happened today? I have no idea. I haven't seen a headline, I haven't seen news. I don't know what's going on. Nobody in my room is talking about anything specific, but there's a lot of interest in my pro trading group in this particular name. So keep an eye on it. Keep an eye on it. What was the other one I wanted to look at? ELF, which got whacked really far back on earnings. Got a lot of call play last week, a lot of more call play today. It's way, way down there, right? It really fell hard and is now starting to climb its way back up. Keep an eye on ELF. That could be a good recovery play. And the other one that also got whacked on earnings is Estee Lauder, right? It's a cosmetic thing. So Elf is also into cosmetics. It's just not a brand name. It's the store selling them. And let's take a look at this. Is not a big play right here, but Elf EL was very active last week. Yeah, so just on this particular one, March 65. I don't think this is the main one. I think it's more like 75, but you can see, no, that's not really the one. That's not so impressive, is it? Yeah. I mean, some good volume today, but that's not the one we wanted to look at. All right. So that's that. Let's get back over and finish up. Here's a chart of L, by the way, doing a 3-bar reversal. It's not a good looking chart. Everything's downtrending. I wouldn't recommend this one necessarily, but keep an eye on it because somebody knows something. It could just be valuation too. Oh, and the other thing about EL Estee Lauder is that it was getting a lot of insider buying late Friday into the close. Market was coming down. Insiders were pounding new shares. So that's usually a good sign of something going on. BULZ, it looks a lot like QQQ, same setup. This, of course, is just the big mags at the top of the QQQ. And the movement today is pretty much driven by those guys. There's not really a whole lot of good stuff going on below the surface. It's pretty much all the big guys at the top. And but keep an eye on bulls as a breakout play of this pullback. I like it above the 21. Don't like it below the 21. Rocket Lab, I jumped out of this one on Friday. It was a little unofficial trade, a little fun money trade. It just was going nowhere, and I was getting tired of holding on to it. And then, of course, today, boom, right back up there. It is what it is, right? That's what happens. But keep in mind, keep this in mind. If you're trading with me in the live trading room, we use the LRC as a way of noting both trend up and down and buy and sell zones. Pink zone in an uptrend is very often, like this one right here and like this one back here, very often a good place to start accumulating shares. So keep that in mind. ACHR came up in my pro trading group when I checked in a couple hours ago. Also strong call flow. Let me see if I can find that one for this one. ACHR. Type in the ticker symbol. No, nothing. Well, okay. Maybe it's just all below 100,000. I don't know, but I'm not going to go searching for that. But anyway, nice price movement. This one looks a lot like Rocket Labs. Sideways, 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 sideways. Hitting the pink zone, couple of days, going nowhere, and then boom, on very good volume, getting the big spur higher to break out of that range, and now to test a recent pivot high. Keep an eye on that one. All right, guys, that's really all I got. I did want to show you one more thing, however, and this is a little tip for those of you that are, sometimes you get into, you're looking at two stocks. You like them both. You look at the charts, pretty much similar charts. You're not sure which one to pick. One of the things I do, I go to two places to help me determine which one is going to have the greater edge. I go to Market Surge, which is the software I use for scanning, for finding the market's best stocks. Where is that? Here it is. So the Market Surge, I'm a representative for Investors Business Daily, and Market Surge is, in my mind, their best product. You can type in, let's pretend we're deciding between Amazon and let me think of another mag. What's another mag? Microsoft. Okay, so we go to Amazon, and one of the ways you can compare Amazon is you look at these numbers. The comp rating of 97. You've got A+, A. Those are all different kinds of metrics for growth and margins and technical strength and all of that. Those are good numbers. They can't really get much better than that. Now let's take a look at Microsoft. You'll see the difference. 63 for a comp. Right? There's only one A, and that's a good place to have it. But the group that it's in, software, not so good. The accumulation distribution, not so good. The technical strength, not so good. So clearly, Amazon is a better play right now than Microsoft. The other place I like to go, though, if I'm stuck between two charts and I can't really decide which one I like better, is Tip Ranks. Tip Ranks is a place where all the analysts, they're, I don't know, 8,000 analysts, something like that. They're ranked by success in the business. So when they give you a buy signal, Amazon right now is a buy. I'm reiterating my buy. I'm raising my price target. I think it, then blah, blah, blah. This is why it should be a good buy. Every time they say something like that, they come out with a new, either an upgrade, downgrade, or a reiteration. TipRanks keeps track of that, and then it projects out 12 months from that time to determine how well that recommendation performed. Did it go up? Did it go down? How much up? How much down? And then they get a grade. The analysts get a grade for how well they nailed it or how poorly they did. 5 stars are guys that you should follow. Everybody else, don't even think about it. Even 4.5 stars are not really worth following. So I like to go to TipRanks. I type in the 2 symbols that I'm interested in, and I see what's the overall analyst rating. This one, of course, is very good. And 47 analysts are following Amazon, and that's very high. You've got a 14% upside target. That's also very good. And then when you scroll down, you're going to see that most of the people that gave recent signals, right? These are sorted by date. So here's one today. Here's one today. Here's one today. Here's one today. Boy, there's a lot of activity on Amazon today. Today, people are coming out. Reiteration, buy, upside targets. And then a bunch on Friday. Whole bunch on Friday. I don't know why, but man, let's look at all those on Friday. I mean, obviously it's Amazon, so these are all at a buy. Many of these are 5 stars, all with good upside targets. Now let's take a look at Microsoft just for comparison's sake. Okay, Microsoft also at a strong buy. That's good. Microsoft $510 upside target. That's even better than Amazon. All right, so maybe I'm going to eat my words here. In market surge, Amazon was the clear winner. Over here in TipRanks, looks like maybe Microsoft is the winner. Let's scroll down. So not as much recent activity. So that's a little bit of concern. They're not as interested in this one. And just looking at the 5 stars, you've got 5-star buy, 5-star buy, 5-star buy, 5-star buy, 5-star hold. Okay, that's a little concern. Here's a guy lowering his price target, lowering his price target, lowering his price target, lowering. No, that's the same. All right, so it's Microsoft is maybe a little bit more of a mixed picture. They both are at strong buys. They both have pretty decent upside. But in near term, I think we have to give the edge to Amazon because of all those reiterations on Friday last week, today, Monday. And there's not a whole lot of new interest in Microsoft. However, they're both pretty good over here in TipRanks, I have to say. We have Microsoft calls on in the live options room, and we have a put spread on Amazon in the live trading room. So we've got our bases covered. We're doing fine. All right, let's get back to charts, and I'll take a few chart requests. I don't want to spend a whole lot of time. I'm sorry. I apologize, but I'll take a look at Google. And then if you guys want to type in any other requests, let me know. All right, so Google is similar to Microsoft in that it got whacked way down on earnings. It's trying to stabilize down here. I would think it's going to need a little more time, although we did buy today because it was at the time it was a green bar. It's right now a red bar, and then it's a little bit below the open. It is an inside day bar, and it seems to be, maybe the selling is done. So what I like about Google, it's still in an uptrend. The MAs are still stacked. It is one of the mags. It's a must-own name for big funds. So it's bound to catch a lot of interest down here at the 50-period moving average or just below it. Inside day bar, as I just said, is typically a marker for the end of a pullback and the beginning, not usually right away, but the beginning of a move back higher. So I do think this is set up for that. You're going to have a little bit of resistance right there where the gap is, right? Gaps, they don't just fill right away. They tend to act as resistance from below, support from above, and this is probably going to be resistance here for a little while. But if we can coil up underneath 190, 191, and it was there not too long ago, right? Last week we were looking at it up here in the low 190s, and then it got slammed with everything else on Friday. It's recovering from that slam. Not yet fully recovered, but I do think it's got a good chance of getting back up there. And maybe a couple of weeks from now, it gets back up above that line and starts filling that gap. That's my best guess for Google. Let's take a look at ERX. So ERX and Gush are both leveraged versions of the energy sector. So energy sector has been a lagging sector. It gets hurt by high interest rates. The price of oil has been all over the map, and now it's starting to trend higher. And I have to say, I've been shying away from energy trades because I did 4 or 5 energy trades early last year, and all but one, I think, got stopped out. So for whatever reason, I was not reading the charts very well in that sector, and I just said I'm just going to avoid it. And I'm kind of glad I did because it really started to come down quite a bit. To me, this looks like it's starting to stabilize, and I think there's a lot of good value down in here. And I'm starting also to see some interest in my pro trader group and some of the oilers like OXY, HES, SLB, some of the supporting names, the oil and gas exploration group, they're starting to catch a good bid. So I like this. Now, we've got a lower low and a lower high. So that's not such a good thing. But right now we're starting to confirm a higher low. In order for this to really take off, of course, it's going to have to take out that pivot high right there, and that's still a ways to go. Um, this to me would be a good long. I like it as a long. I would keep the size small. I would keep my stop below 58, and I would start to move up my stop as I could. It's doing really well today. I like this almost like a 3-bar reversal. Here's your 3-bar reversal, and then it reversed back to the downside. So kind of denying the confirmation, but setting up what could also be, here's your inside day bar, setting up what could be another attempt at a 3-bar reversal. 62, probably going to get a little stuck there, and then the 200, and then it's got the trend line to deal with before it finally gets up here at about 67. So there's a lot of potential resistance above, but I really think on a valuation basis, and because rates probably have peaked out, they can only come down from where they are. I think we've got a good longer term trade here forming. Okay, I can't do all of these. Cost, I know people are saying it was weak early today. It was certainly weak on Friday, but everything was weak on Friday. Certainly threatened to come back in off of this big momentum move, but then today right back up to all the highs of the day. So it's a hold. It's not a buy up here. You don't want to buy it up at the top. You'll end up being a bag holder because sooner or later you're going to get a big swoosh, right? So typically on a big momentum move, you get you get some warning signs. You don't have to get out right away, but just pay attention when you get a couple of red bars in a row. When you start to see some red volume bars taller than the day before, you get a big distribution day like that one right there. That didn't stop the uptrend, but it sure slowed down. And then we had a distribution day right there. We had a distribution day right there, and a couple more days of fluctuating around up there in the blue zone. And then it was a big drop down. So you don't want to get sucked into that, right? That's what you don't want to get into. But if you bought down here, which is where you should be buying it, or down here in the pink zone, even better, of an uptrending LRC, it's a hold. But man, I would not stay in it if it broke that the bottom of that low of that red bar right there. Boil, again, another energy trade. Haven't been in this one for a long time, either boil or cold. It looks to me like, yeah, so it was way up there, right? Way up there. And of course, it's a leveraged instrument, and so it's going to suffer some contango effect, which tends to keep it, it puts pressure on it. That's one of the things I don't like about holding longer term these 3x positions. But here's your resistance, of course, that's way up there at 80. Your recent pivot low is way down here at 50. and you're right in the middle of that range. So the momentum is higher. Volume balance very good, right? So people are accumulating shares here. I don't think this is going to slow down that drastically until it gets up to 80. But of course, uh, natural gas is a play on on rates, on the U.S. dollar, on the weather, on supply and demand. Anything can happen. It's not just a technical play, but just looking at the technicals, I would say this momentum is going to carry on. Your first place where it could get stuck is right here around 70. Right? There's a little pivot high right there where it got reversed very quickly and came all the way back down to 50. 70 to 50, that's a pretty big drop. So be careful if it gets up to 70, but it's at 65 now. You still have a little more upside room. I wouldn't buy it today, though. I wouldn't start a new position today. So we're long ARK. We showed that this one already. ASML. Okay, so this is a semiconductor play, pretty sure. It got whacked on earnings, although it looks like they were good, and whacked again prior to that. It was a beat, but way down. A beat, way down. Another beat that actually went higher, so that's a good sign. But this has got a long way to go. Uh, I know this company fairly well because I did write an article about it some 6 7 years ago now, and I know back then it was it was really one of the probably top 10 companies in the space, but it's had some trouble since then. As a recovery play, however, I'm going to say that it's not horrible. It's not horrible. Why do I say that? Well, for one, the 21 is above the 50. The 50 is rising, so we're starting to see some price momentum confirmed there. Volume balance is not very good yet, so that would need to change before I would get too interested in it. But I do like this little you kind of look for the pattern within the pattern, right? So here's the pattern within the pattern, and it is a nice tight consolidation, what I call an apex setup, and right at the apex, and it's starting to break out to the upside. So short term, this looks pretty good for a test up to 780 or so. Let me just do two more. I'll do two more, and I'm sorry I can't get to everybody. Amal. All right, so we've got an uptrend. It's a modest one, not a strong one. 21 just crossing over the 50 in a bullish fashion. 200 showing us a nice strong long-term trend, and it's one of these consolidations where the highs are getting lower and the lows are getting higher, and we are in the top half of that consolidation. I would say as long as it's above the 50 and 21, especially the 21, it's a reasonable buy. It's certainly a hold. It's not a short by any stretch. You've got pretty good volume balance. You've got a pretty fresh stochastics buy signal. I'd say this is a very good chance of getting up above the resistance line. You're going to have some trouble probably around 37. And then if that gets through, it's 38. One more, and then we're done. SMCI, which I think reports tonight, right? And there's a guy in my pro trader group who just bought some calls for the he's going out to Friday lotto calls. He's up at the 50 strike. So of course the earnings are going to pump premium way up, and you're way up there at 50. If it doesn't get anywhere near 50 on earnings, you're going to see all that premium just evaporate very quickly. So it's a very low probability trade, I'd have to say. But he's certain that SMCI is going to come out not only with good numbers, but they're also going to come out and they're going to say that all that accounting problem was not a real problem after all, and we've got it all sorted, and here we're going to move forward. The valuations here are very compelling. Still some very good growth numbers. In the space, it's probably got the best fundamentals right now, on paper at least. What's hanging over it is the threat that they've been cooking the books, and that could be a big major rug pull. So we'll have to see. I'm not sure his trade is going to work out, but if someone had some shares of kind of a fun money sized little lotto play, I wouldn't kick anybody in the pants for holding this over earnings. I'm really curious to see where it goes. I'm hoping for everybody that is long that you have a great night tonight. God bless everybody. Have a great rest of the day. I'll be back in the room in just a little bit after producing this video. Bye for now.